I think futures options volumes are growing for a variety of reasons. Um, I think one of the biggest ones that I've observed is simply the maturation of other markets. So futures markets, very mature. Equities markets, very mature. Equity options markets, very mature, very technologically advanced. I think kind of the next frontier for some of those groups that were embedded in those markets is just naturally kind of commodities options, agricultural options, that sort of thing. So I think it was the next market that hadn't been as electronified, so to speak, that created an opportunity for people who'd been doing it in other places to come join. So because the volumes aren't growing simply because of technology, but I think because of other factors in the market, I think it creates a great opportunity for technology providers to bring technology to bear. People aren't trading futures options just because they got better software. It's now that they're doing it, if they could get better software, they could do even more. And so I think maybe we'll see more of that virtuous cycle of technology driving volumes, driving technology now, even if the initial impetus for that volume wasn't necessarily technology. So we're interested in options because these volumes are growing, and we're looking for new opportunities to grow our business and extend what we offer to our current customers. And there's a lot of people who are trading futures who are looking to at least dabble in, if not get more kind of fully committed to trading futures options. So we want to provide a tool set that can address that market. And what we see is the barrier to trading options is pretty high, not just because the knowledge barrier, if you don't know what you're doing, it's tricky and difficult to do, but also the technology barrier. So the costs to entry are pretty high. Getting a professional trading package for options requires infrastructure, requires real investment. It's not the kind of thing you can just try. And so we're looking for interesting ways to address that market. So we think there's some opportunity to innovate here. If you look at the screens of most option systems, they're pretty similar. Everyone's got a similar chain. Everyone has a similar sheets view. Everyone's visualizing volatility in pretty much the same way. So we think there's some opportunity for us to try to think a little differently, to focus on workflows. I think more and more volumes happening in block markets, OTC markets, and so trying to find ways to help people price up spreads, compare one spread against another against the rest of the market, do market scanning to find opportunities that exist that might not be right there in the options chain that you're looking at. Those are the kind of things that we're focusing on. So we'll build some things that look like everybody else, because you need some of that standard functionality. But we think by leveraging long-term data storage with things like volatility information, storing volatility as much or more than we store market data, should start to create opportunities to analyze not just the current market, but analyze how volatility and options are moving over time. And in the end, that should yield, I think, more value for the end user than just kind of your classic chain, sheets view, risks screen. So we think there's a great opportunity to innovate, but it's going to require, I think, leveraging some back-end technologies that are new and different in terms of data storage and data access, and then getting creative in what we're doing in the visual interface.